Very warm welcome to this the very niche topic that we have chosen today on AI in financial services, uncovering the ground truth. I think all of us, all of the people on the screen are great experts in the subject, been using in various aspects of their life, whether it is their businesses or academic or consulting and also the policymakers with us. So we have a whole gamut of people to really learn from this space. AI in financial services, it's being used very vastly in a lot of areas, especially to improve the customer experience. And I'm sure it's a growing area. Each one of us are going to learn more from the expertise which is sitting here. So without any further ado, may I now invite our past president and also the chairman of the Financial Sector Council of FICCI, Mr. Rashesh Shah, for a quick welcome address, please. Over to you, Rashesh.
Thank you, Jyoti, and good morning to all of you. I think it's a great honor to be here. It's obviously something that is very close to all our hearts, which is not only financial services, but the use of technology, especially artificial intelligence in that. So thank you to the entire FICCI team for making the effort to put together this conference. I think it's not only required but also very aptly timed because we are just coming out of the COVID pandemic. I think it's hopefully on its last legs getting over, and I think the new era in financial services in India is going to have technology at the cornerstone. It's almost like a cliche to say that the future financial services companies will be technology companies doing financial services rather than financial services companies using technology. And I think all of us are moving from a technology as an enabler to technology as a lead part of the financial services. So I think with that, I want to extend a warm welcome to all the dignitaries and thank you to each one of you for joining us today. Extremely grateful to Miss Anna Roy, Senior Advisor, Niti Ayog, for taking out the time and joining us. As we heard, she has a lot of other things, other calls on her time, and in spite of that, the fact that she's taking the time out is truly something to be very grateful about. And also to welcome Professor D. Janki Raman, Director, IDRBT. Thank you, Professor, for joining us for this. Your presence also really adds a lot of weight to this conference. This conference being held under the aegis of FIFA, of the FICCI Financial Sector Council. We have had capital market committee, insurance committee, banking committee, but now we have put together an overarching FICCI Financial Sector Council, which brings all the aspects of the different verticals of financial services under one roof. And for this year, 2022, this is our first engagement. So this conference is extra special for that. Also, it's very opportune because we are meeting, as I said, at a very important point of time where, because of the India stack and everything else that is going on in India, the technology and financial services interaction is at a very important inflection point, and it's technology is permeating all facets of our life, but financial services is truly getting transformed with the new technologies. And in this, artificial intelligence has played a huge role and is playing and will continue to play as we go forward. As you know, I think in financial services, given where we are in India, because though India is now a $3 trillion country as a GDP, which makes us amongst the five or six largest GDP economies in the world, but purchasing power parity, we are in the top three economies in the world already. But our financial services still has a long way to go. Part of it has been unit economics, cost, because there is a large part of the population where transaction values are very low, amounts are very low. But if we really want to democratize financial services, we will have to reach out to a large mass of India. Financial services cannot be a class business, it has to be a mass business going forward. And for the next 20 years, whether it's savings, whether it's investments, whether it's insurance, whether it's capital market investments, whichever part of financial services, unless we reach at least 500, 600, 700 million people in India, I think we would not have done real justice to the opportunity that is there in Indian economy. We are on our way from $3 trillion now to $10 trillion. I think any mathematical calculation you do between 2032 to 2034, somewhere in that range, India should become a $10 trillion economy. And the path forward, so it's very opportune that we are meeting in 2022, because if you look at the next 10 to 12 years, we are on the path to be a $10 trillion economy. And in that, what role financial services can play to not only make this growth happen, but also make sure this growth is equitable, it's fair, and is also allowing a large part of the population to enjoy the fruits of this growth. And I think in financial services, the three most important parts have been customer engagement, risk management, and operations of process. Because I think cost of intermediation has been very high. Innovation has improved, but still has a long way to go. So I think between customer experience, innovation, and cost intermediation cost coming down. These are three most important outcomes that we have to look for. So when we look at technology, I think one of the things in business we learn is technology by itself is not as important unless we convert into use cases. And I think the three most important use cases, parts of use cases in financial services that we understand where technology is required is in customer experience, is in innovation, because finding out new products at a cheaper cost, right product for the right customers, and lastly, in reducing the intermediation cost by automation, by improving your processes, by reducing the handshakes that are required. We have seen that in KYC and others. KYC, which used to be a 1 week affair, can now be done in half an hour, and I think very soon it will be 5 minutes. You can do a 5 minute KYC and start operating your investment account or your brokerage account. And a lot of this is resting on artificial intelligence. Like if I give you a few examples, insurance pricing. Insurance in India has been one other area where there is a lot of efficiency possible, because I think the right product at the right price to the right customer in insurance is very important. And if you want to increase the penetration of insurance, and insurance not just for savings that has been there for long, but insurance truly for risk management, how house insurance and even car insurance, how to make it more efficient. AI can play a big role in assessing a customer's risk profile, provide the right pricing for that. Robo advisory has been part and parcel of investment management. I think using robo advisors to educate customers on their asset allocation, on their investment management has been very important. More and more customers, even smaller retail customers, want personalized service. They want so hyper personalization is one use case of artificial intelligence that can really improve customer engagement and delight customers. AI powered chatbots has been one other use case. I think customers need to talk to somebody, but I think always a human interface is expensive. Of course, it's very clunky and irritating, and I know many customers, including me, when we have to chat with a computer or a chat box, it's very very irritating. But I think all these are early days. But if we all collectively invest in that, there is a lot of efficiency, innovation possible in that. Even in risk management, from algorithmic trading to AI fraud detection, I think insurance companies have been using this very, very deeply. Banks have been using AI fraud detection systems with a machine learning algorithm which can analyze huge process of data. I think the data is falling in place. But as somebody said, data is the new oil. But artificial intelligence is the refining power, because oil without refining is not any use. So, though we might generate a lot of data through artificial intelligence and machine learning and algorithms, converting that data into useful end use is very, very important. I think in credit, AI credit scoring is becoming more and more part of that, and this will allow a lot more people to access credit in India. I think access to credit is truly not democratized as of now, and if we use technology, credit access is going to change the fortunes of a lot of people in this country. Because if people want to grow their incomes, if they want to, have economic upward mobility, access to credit is going to be very important. Operations, all of this are going to be very important. India has made rapid strides. I think in the last 5 years, I've been in the financial services industry for 30 years. But what I've seen in the last 5 years has been amazing. I think with the India stack falling in place, with data becoming cheaper, access to internet and smartphones, all of this has really allowed India to make big strides. I think we can be one of the leaders in the world in using technology in financial services. Many NBFCs like ours have proprietary AI technology for secured, unsecured lending, and and a large part of this is moving from people to people to people using apps and getting services done. I think the entire payment system in India has gone through a transformation in the last 5 years. We have all experienced it. I think UPI and BHIM and all have really transformed. And it's still early days, because I think if we extrapolate this over the next 5 years, it looks really amazing. And this has really brought the cost of intermediation. Payment systems used to be very expensive. Now they are very, very cheap for people to access. And as the quality of data is improving, as the quality of algorithms is improving, as history is getting created and credit history is getting created, I think this will have a much more powerful impact as we go forward. As we do this, I think there are some challenges in using artificial intelligence which are still there. uh, it's going to increase risk, because I think AI will increase the overall market-wide risk, because there could be a lot of movement in one direction, and some of this risk will arise when new data is being used. So non-traditional data sets are being used. They could have errors of interpretation. All that is going to be very important. One other very important point in this is the data sharing regulations, entities, and the governance around that, and the privacy issues are going to be very big as we go along. And the third is, fintechs and banking system stability and all will have to play, because the more innovation you have, the more changes you will have, the more upheaval you could have. But at the same time, banking is not like any other industry. Banking does hold a lot of deposits for customers on a long-term basis. The faith and the trust, which is a very emotional aspect also, is an important. So as we get excited with artificial intelligence and the machines and computers, we need to keep the emotional aspect of faith and trust and confidence also in mind as you go along. And I think to get this done, the industry players obviously will have to do a lot of the work. A lot of the heavy work will be done by the industry, but the government and the regulators can play a big role. Uh, they have an increasingly, and we have seen that RBI, IRDA, SEBI, government have played a big role in forming and creating frameworks and sandbox and rules and regulation to enable this innovation to happen, but at the same time keeping trust in the system and the stability of the system in mind. Niti Aayog has been one of the thought leaders in this. They have come out with a series of papers on artificial intelligence, and we have Ms. Roy with us, who's going to share perspectives on how the government is looking at AI. I think this government in the last 5, 6 years have clearly shown that they are very technology friendly for business. They want businesses to use more and more technology in all ways, and any change in rules and regulation to promote this, to encourage innovation, to encourage experimentation, is something that the government has constantly shown, and Niti Aayog has been at the forefront of that. And we also have the guidance of Professor Janki Raman on adopting new technologies in banking sector in India, where he's done a lot of work. So I think uh, with that, I think banks have done quite a bit of work on AI. I think insurance companies are doing a lot of work on AI. Investment firms are also using it a lot more nowadays. So this conference will allow us to see how all this is falling in place, what is still to be done, who's doing what. I think some great ideas will be shared, some great insights will be exchanged. And with that, I think we also keep in mind the challenges so that we can enumerate them and start working on the challenges, because I think this whole journey is going to be constantly overcoming challenges and capitalizing on the opportunity as we go along. So, with this, again, thank you very much for giving me an opportunity to be part of this conference. And I once again welcome all of you and wish the conference all the success. Thank you very much.
Thank you so much, Mr. Shah. You've kind of given, the whole gamut of opportunities which lie in the AI application area, and that was the whole idea behind this conference. And so, thanks once again for your time. I know you're also traveling; but you took time out of your very busy schedule. So, thank you so much for being there. We have, as you all know, we've mentioned that we've come out with a paper along with so FICCI and PwC team together has done a paper on the applications of AI. This is a survey-based report. We had actually surveyed a lot of senior, people in the financial sector to understand the opportunities, challenges, and what strengths, etc., and how it can be very effectively used across various areas, as enumerated by Mr. Shah. So that is the paper that we are going to be now talking about, and we're very pleased to kind of release this in front of all the dignitaries, especially Ms. Roy and Mr. Janki Raman and Dr. Janki Raman, as well as Rashesh and Govi. So may I request Vivek, if you could just make that presentation, enlighten everybody about the work that we have done. Over to you, Vivek.
Thank you so much. Thank you so much, Jyoti ma'am and Fiki, for giving us this opportunity. I just have a brief presentation, which let me try to share. I'll just talk through some of the key findings. So when we came together along with the guidance of the committee, we said these are the objectives we want to set for ourselves. Demystify the AI landscape, survey the senior leaders, and we did over 25 survey respondents, thanks to all our clients and colleagues and friends who gave the very important perspectives. Consolidated the key use cases, because everyone understands the potential. But what we realized is a lot of experiments have been done, some successful, some not. How do we learn from it? So we have enumerated the use cases as well. But most importantly, AI is not a straightforward journey. It's a pretty complex journey. It requires multiple capabilities to work in sync. So what does that maturity framework look like? So I proposed a framework, as well as we have mapped it to our different industry respondents, so everyone can get a sense of how they are doing across different dimensions of that framework. And finally, as Rashish pointed out, there are some impediments as well. There's a role that regulators can play, as well as the clients can play when they adopt it, which will ease out the entire adoption. So when you look at the maturity drivers, we built a 15-point drivers scale. This again included in the report, so or we can reach out to us and we're happy to discuss with anyone who would be of interest. Starting from how does the capability vary across planning to building a COE to the centralized AI model deployment, how is the data management capability, how is the talent, all those are the different attributes which are needed. We have kind of put in a comparative between medium as well as the leaders in that whole segment. It's a whole journey. So I'm sure when we draw this again next year, we could have a slightly varied kind of, the spider graph could expand a little bit outward, as well as new challenges could come in, which we might have to start baking in. So this is one perspective I want to give. Now, talking about, I just want to talk through some of the key, some of the facts we got in the survey and the report, which were fascinating. Sorry. So one was what was clear, if I go from left to right, that whether AI, the proper sentiment has been positive. Over probably almost 57% of the respondents have said that it does give them a competitive edge. So for those respondents or clients and industry members who are thinking about their journey, want to build a business case, is a very important value point. Second, as you were just chatting with Professor Janki Raman before the call, the interaction use case, the chatbot or automation, or even what Rashish mentioned in terms of customer bots, that's one area where we have seen maximum adoption of AI. The top regulatory concern has been around privacy and data protection. And also an anecdote where I think a regulator can play a very important role is also the transparency of AI. Now, because AI can have multiple disciplines or areas which can work within it, or you could have different ways to build a model. One concern does emerge is explainability of it, and if a regulator could come in and raise some challenges against it, right? So if you're able to create certain model testing framework, reference model framework, that could help the industry in adopting it more freely without fear of consequences, if you may. The key hurdle as to be expected is around data availability, which again we feel as we move forward will, as the broader ecosystem is getting digitized, as we're getting pure online account opening, as paper starts getting reduced, it should get mitigated to a large degree. But it can also get compounded because one of the key strategies, digital strategies that we have seen banks and other financial institutions play is the ecosystem strategy, where they are working with a lot of players outside the organization's boundaries. Now that does expand the amount of data that we have to work with, but it also increases the complexity about creating a golden source, creating and ensuring that there is the same master data. The type of customers could be tagged as different types of customers by different ecosystem players, so on and so forth. Key challenge also has been around talent. Now, this is one area we expect a lot of work to happen, and where again public and private could play a big role. The more input talent that we have in the ecosystem, it would be better for the industry to work with it. And lastly, just to give a benchmark, investment in AI is approximately less than around 10% of the overall tech costs, which is also fair, knowing that a lot of tech costs do go into automation and running core applications and infrastructure. But as we see more cloud getting adopted, some of those capex costs should start coming down, as well as the AI capabilities that we have started seeing coming up in the distributed cloud computing environment, along with power of computing, should help in giving a boost to more adoption of AI. Lastly, I thought I'll just leave the audience with these 5 questions as they are looking at themselves and benchmarking where they're in the journey. One, what is their current level of AI adoption? And how can they move up the AI maturity curve, use our framework, 15-point framework that we have given? What are the top use cases? What have you considered? What have you left out? Where do you see opportunity? Again, one stroke doesn't fit all. We have to tailor every organization, every bank, every insurer is, or every mutual fund is different. It might have to be tailored. How do we address the challenge of data availability? It is a tough job, and many times we have seen the analytical frameworks and data frameworks completely out of sync, because data is a hard job, right? Analytics sounds cool, but get the hard job done right, get the data infrastructure done right, you will reap benefits coming out of the AI model. And lastly, solve the talent problem early on, then push it for later. With that, Jyoti, we'll hand it back to you and the brief highlight of the report.
Thank you, Vivek. You really put out, a lot of issues around the AI. And I think this kind of sets the tone for the rest of the event to progress. And I'm sure we will have some responses come from the regulators also and the government representatives that we have here. We now move to, a very special address by Professor D. Janaki Raman. He is presently the director of the Institute for Development and Research in Banking Technology. And as I see from the experience, very immense, rich experience in the technology space, I think he is the right person to really tell us about what's really happening in the banking space in technology. As I see, his current research focus is on building large-scale distributed systems and challenges in big data processing, along with cloud computing and blockchain technologies. So couldn't have had a better person from the regulatory space to talk about it. So over to you, Professor Janaki Raman.
Thank you, Jyoti. Thanks for the invitation to be part of this very important event. Let me first congratulate and also compliment FICCI and PwC for the excellent survey they have done on this technology, AI technology in financial services. I think it's a wonderful thing that they have done, because it's very important to take stock of what is the adoption and where the issues are arising with the use of AI, in the banking and financial sector. I suddenly feel that we need to look at this technology very, very deeply going forward, because as Sundar Pichai has pointed out earlier, that this technology, AI technology, is more revolutionary than any other previous technologies that we know of. So from that sense, it is likely to disrupt, all aspects of many industry verticals, including banking and financial vertical. As pointed out by Shah, actually the four things where banking and financial sectors are majorly concerned. One is the customer experience. The second is credit scoring. And the third is risk management. And fourth is productivity. If you look at all these four aspects, I think they are now being majorly impacted by AI technology. For example, if you look at the customer experience, the customer journey itself is drastically changing. If you look at in recent times, people are no longer looking at just keeping their money in the banks or financial institutions, but they're looking at a complete life cycle management and support for all the aspects of their financial journey with the banking system. So from that sense, I think AI, trying to help in the customer experience, in my opinion, is one of the major use cases that is coming up. When this aspect is coming up, the most important thing that's happening is the customer data management. For example, the regulator rightly is concerned with the data protection and data privacy. Now, consent management for the data is very, very important, and both the government and MIT are working towards actually putting the data privacy bill, which becomes a very important bill. The other countries have already adopted some level of this data protection bills, and then some of them are very stringent in terms of how the data can be used and exploited by some of the AI algorithms. So from that perspective, data privacy becomes a very, very important aspect, and rightly brought out by Vivek's survey, saying that this is one of the key things that needs to be addressed going forward in the AI journey. The other important thing that needs to be addressed in the AI journey very early on, and we should all understand the importance of actually bias in the AI algorithms. When we set up the AI systems, we should also realize the inherent model bias that could creep in, and the resulting issues and ethical issues resulting in the use of the AI systems. This should be understood very early on. For example, if you look at the credit expansion, and we want to actually get into a credit-based society, a lot of transactional data is going to be captured, and then that will be used for rating the credit scores, and then making credit accessible for people. Now, one of the things that we should understand here is if bias creeps in, and then it starts excluding certain segments of the population, then I think we will have issues resulting in adoption and automation of this process. So we should be extremely careful in the application of AI, and not allow this technology to result in biases for certain segments as we start making the credit universally available. With PM Jan Dhan Yojana, now we have achieved something like 40 crore bank accounts for people. Now going forward, the access to credit needs to be provided for all these people, and that's where basically banks will be using a lot of data and AI tools for risk management and making sure the retail credit is expanded in the banking sector. And that's where basically AI can play a very phenomenal role. When we apply AI tools, we should be very, very conscious of the ethical issues that could come in by the application of the data. So I think that was rightly brought out. One of the other very important thing going forward is basically the a movement of India stack into a financial stack for financial and banking sector. IDRBT now started working with the government of India on a project for blockchain and machine learning based identity system, video KYC system. And in fact, we are not calling this as a KYC system, know your customer. We are actually calling this as protect your customer, because going forward, the most important thing is the mindset when using data of the customer should change in the banking and the financial sector. It is not about using the data of the customer, but protecting the customer data from unauthorized use is extremely important as we go forward. So in that sense, IDRBT is now developing an identity system where we are trying to set up a blockchain-based and machine learning-based KYC system. And this will be across regulators, which means the customer needs to do his identity only once, and then is financial identity, because Aadhaar is already an identity. But in addition to Aadhaar, what we need to create is the liveness property for financial transactions. So the idea is to build a new identity based on Aadhaar, which will be the basis for the financial and banking system. And this is what is being developed by IDRBT along with other institutions, which include IIIT Hyderabad, IIT Bhilai, and RBI Innovation Hub, and also Technology Innovation Hub at Bhilai. So the idea is that this should become the basis for the next generation financial stack, and a lot of other things can be powered on top of once the KYC problem is solved. It is going to actually create a new kind of a financial stack that can be exploited in multiple ways. But one of the things as a next step, what we would like to do is associate with every citizen a wallet on the blockchain system, so that this can become part of any kind of transaction movement, and transparency in the transaction system that can come in as a next step. And this could actually change the way government can do policy intervention with subsidies and other related issues, and that could change the way we can experiment with government subsidies and other policy interventions. These are the places where I believe going forward we're going to see significant financial impacts coming in. The other very important thing is if you look at the UPI, which has become one of the most powerful drivers for the digital transactions. Now is at the stage of 4 billion plus transactions per month. India actually leading now, and set up a model for the rest of the world to actually look at how platforms like this can be developed for digital transactions. One of the key things that you start realizing is the cyber security aspect of it, which needs to be closely looked at as we scale this and we reach 1 billion transactions per day. It's no longer possible to actually look at all these transactions except with AI models, building AI models to understand the nature of these transactions, the frauds that could happen with these transactions. This is where AI could be playing a major role into future as we scale our data to terabytes and petabytes of data we need to deal on a day-to-day basis. In fact, one of the key things that we have been working on is AI. Not much has changed in terms of the models since the last 20-25 years. But what really made AI now different and then a mainstream technology is the ability to actually build models with large data in less time. This is where we are looking at the synergy of machine learning and cloud computing. And this is where all the convergence is happening. So if you look at many of the banking systems, they are trying to move into the cloud platforms, including Deutsche Bank and the US Bank, are moving into the cloud platform, mainly to harness the AI power. Because with the cloud, cloud computing power that is available with the auto scaling, your ability to deal with large data and build the machine learning models greatly is improved. And that's where basically the AI is becoming very, very powerful tool with the hands of the decision makers to be able to do a lot of things very easily, and also have these models auto deployed and then able to use these models on a day-to-day basis. So from that perspective, I would like to summarize by saying that the AI, banking and financial systems, and then the cloud, in my opinion, are the three technologies that are coming together to create a synergy for the next generation products. And that's what I believe is the future. And with these few words, I would like to thank Vicky for inviting me to be part of this very interesting conference. And I look forward to the deliberations in this conference and the takeaways from this conference for the entire sector. Thank you very much.
Thank you, Professor. Thank you for placing some very pertinent issues. We now move to, we have Ms. Anna Roy, who's actually worked a lot in NITI in this area. Ma'am, over to you.
Thank you very much. First of all, thanks to Vicky for giving me this opportunity. And after those wonderful interventions by Dr. Janki Raman, Mr. Shah, as well as the presentation by Vivek, I find most of the things I wanted to say have been covered. But nonetheless, I will give the government's perspective on the issues. First of all, we need to keep it in mind that it is an evolving technology, and we need, whether we talk about regulations or policies, necessary, by perforce, it will be kind of lagging behind the innovation. It cannot be held. That is how exponentially the innovation grows. So, as policy makers and as regulators, we need to take that extra bit that regulation or regulatory framework should not kind of inhibit innovation. And there, I think one important thing which needs to be done is for everybody to work together and not in silos. These kind of, I think, workshops where regulators and other, industry as well as policy makers are brought go through the consultation route. So we do not come out with policy paper. Instead, what we do is prepare a draft and put up for public discussion, public comments. We collate all the comments, we give a response to comments, and also publish those responses so that everybody knows why we are doing, and if something is not being done, what is the rationale. I think that kind of transparency in policy making is extremely important. The consultative part, stakeholder consultative part, and I feel all stakeholders need to join hands and work together towards a common goal. Having said that, coming to the policy aspect, in 2018, we came out with the AI policy for the country. And there, one of the insights which we gave based on some other reports by other consulting firms was that the bottom line approach driven And we felt that, sectors like financial sectors specifically was receiving a considerable amount of investment, because it was actually AI was helping in overcoming several problems, and helping in the addressing bottom line considerations of the firms. So we felt that government should be an enabler in this space, and wherever the industry is self-sufficient to promote investment, to guide innovation, there whatever the catalyst role the government can play should be done. Rest should be left to the industry. So while the approach, the strategy spoke about government leading the path in sectors like health, education, where which are typically kind of represented by public goods, and where private investment may not be so forthcoming, where social considerations are high, there we felt government should take a lead. And in sectors like financial sector, we felt that government could be just an enabler. That is not to say that financial sector for government is anyway less important, because as some of the previous speakers mentioned, inclusion is one of the important policies of the government, around which a lot of these uh, technology innovations are being structured. So where inclusion comes, there it becomes a priority sector for the government, and this is also one of the focus areas of the government. Several issues have been kind of raised, but a few which I would like to mention where Niti Aayog is directly involved is, first, not focus so much on the technology development, but on the outcome of the technology. Also, in my to come out with a report which talks about the use cases and the potential of XR, rather than dwell on how XR is being developed, what are the technological changes, and globally in India, what are the other changes which are expected. So we in Niti Aayog, at least in many respects, try to focus on the outcome of the technology and the potential areas. And in that way, I think this report is really welcome, because it talks also about the use cases. The other thing which we do is to implement pilots, and Vivek is one of our partners, where we work together, like we are working on adopting blockchain in trade finance, and we are working on developing such pilot projects, because only by doing at a pilot stage can we understand the governance challenges of such adoption of such technology. So that is also a focus area for Niti. And we try to take up as many pilot projects as possible, but nonetheless the stress needs to be on scaling up of these pilots, because we see that how you move from the pilot to a full-fledged project is also something which needs our consideration. So that is another area. Then speakers mentioned about ethics. In the space of AI, responsible AI, I think Niti Aayog has been a front runner. We have started a dialogue, we have started a platform. Two of our research projects as policy documents have already been released. The first one is responsible AI part 1, which we call is identifying the principles. The second one is some kind of a framework where these principles can be adopted. And in the third part, we are working to identify some use cases where how these principles and how the enabling framework for implementation of these and adoption of these principles actually translate into a real use case. So I, to the audience of today's webinar, and also to the co-panelists, it is a request that please come work with us in this part 3 of the responsible AI. And financial sector could become one of the important segments for the use case, in responsible AI space. And that is work in progress, and we are very excited about it, and we are looking forward to it. And financial sector specifically, with digital divide, with digital literacy issues, cyber security issues, fraud related issues, I think it presents a whole lot of avenues for looking at ethical use. And Dr. Janki Raman spoke at length on the issue of bias in AI models. But while we understand bias, at least understanding these problems are important. But today, the technology also helps us in overcoming these kind of problems associated with AI models. So, awareness about at least starting a dialogue on understanding the problem and how it can be overcome is important. Privacy is another issue which is very important, especially in financial sector where individual data is concerned. Besides health, I feel this is one of the key areas where privacy needs to be kept at a high pecking order. There also, the account aggregator and consent based data sharing through account aggregator, the DAPA framework which iSpirit developed and it was released in collaboration with Niti Aayog. We are closely working on promoting account aggregator platform, which we feel is the future, because while privacy issues are important, we also need to kind of ensure that we do not throw away the baby with the bathwater. We utilize the data with privacy considerations being taken care of, proper consent by the data owners. And this is the second wave of financial inclusion, which I generally call it the second wave post the India Stack wave, which saw a lot of digital payments, opening of bank accounts, etc. Now, account aggregator will help us in reaching out to that underserved segment, remains out of the formal financial fold, A, because of the ticket size, B, because of various other considerations. The products are not bespoke, and it's more of a supplier's market than a demand market for products. So technology helps us deal with all these challenges where the last mile can be addressed. And there, this stack approach will really help, where we provide access to the data in an easy manner, which allows the startup and others to access that data and come out with bespoke products, like we saw in the UPI space. So similar such initiatives are being done in the in other spaces as well. And credit being one, the other important is really insurance and pension. With the with the lifespan increasing, and without pension, without a social security, I think that is one of the other areas which really needs a close focus by the government on how we can leverage technology to provide better services in the area of insurance and pension, so that that segment which continues to be out of this official fold can be brought in the fold. So to sum it up, I think these are some of the areas which we are working on. We always look forward for collaboration, and we like Dr. Janki Raman is there. It would be great to have IDBRT to work with us on several of these projects. If we if we have collaboration, that will carry that kind of weight behind any paper that comes out, or any kind of research project that we do. So I think we need to move away from the siloed approach and work more like collaborators. That is which will give wind to our wings and allow us to achieve the goals that we have set for ourselves. Thank you very much. Thanks to Vicky again for inviting me.
Thank you so much, ma'am. I know you have pressure on time and your personal challenges as well. Thank you so much, despite that, for being with us and giving and all your observations. And we'd be most happy, as Vicky, also to work with you on all of these areas. Now I turn to Mr. Kovid Rajan, who is co-chair of the FICCI FinTech Committee and co-founder and director Perfios, for the concluding remarks. But I would also like to mention that we do have about 500 plus audience, including some representatives from various regulators as well. So it's a very good participant lot that we have with ourselves. So we'll be grateful if we can get feedback from all of them on the the proceedings that are going to be during the day as well. So over to you, Govi, for your vote of thanks.
Jyoti. First of all, my thanks to Jyoti, your team, and Vicky. Vicky has always been at the forefront of highlighting some of the emerging, whether it's technology or business issues, and this is no different. As we know, AI and ML and related technologies are the thing that are propelling the financial services. And thanks to Vicky for highlighting this and having this session. And based on that, Mr. Shah, leveraging his large experience in this space and also his role as a chairman, was able to articulate what is in store for today as well as with AI and what financial services can look forward to in the AI. Thanks, Mr. Shah, for sharing your thoughts amidst your busy schedule. Vivek, you and your team has put out a wonderful report because instead of talking about various things in AI and ML and financial services, you are able to provide this framework against which each one of us can measure ourselves, where we are and what is it that we can look forward to. And as you rightly said, next year this may look slightly different. But that is what all evolving and emerging technologies go through. And so thanks to you and your team for putting together this report. And I'm hoping that this will be a work in progress kind of a report on an ongoing basis, because that will be a fantastic framework against which each one of us can measure our progress also. So thanks to you. And Professor Janaki Raman, again, leveraging his huge academic background and research experience and his recent exposure to the domain, was able to articulate a lot of interesting things. He started out with bias, saying how, although it may be a great model, great data, that the moment the bias creeps in, it may actually be counterproductive. And he was talking about consent and how the right use of data is important. And as Rai talked about, account aggregator is a start in that direction, where we are ensuring that the user's consent is obtained, not only for using of the data, but for how long it can be used, how frequently it can be used. And some of this can hopefully take care of the right use of data and how data is not misused. But having said that, this point about bias and the ethical AI becomes extremely important. And a couple of panels that we are going to be following up after this are going to address that as to how we can build trust with AI, whether it is bias or explainable AI or responsible AI. Those are all issues that industry practitioners and the academicians and the policymakers have to address. And hopefully in these panels, we'll get some really interesting insights. And then Mrs. Rai talked about some really neat stuff where she mentioned that in areas like financial services, because of the nature of the industry kind of driving some of this, the government will play more of a role of an enabler, whereas in the public areas like education or health, it will be more of a driver. And I think that's the right thing, because that won't hinder the innovation, but at the same time, provide the helping hand wherever required. And again, she highlighted the fact that account aggregator can be the next wave that will help in financial inclusion. Some of the things that both Mr. Shah and Mr. Janaki Raman talked about. So this looks like a very interesting day with a couple of panels that are following up with this, addressing exactly these same issues. And I'm looking forward to these deliberations. Once again, thanks, Jyoti and Vicky, for providing this opportunity. Thank you.
Thank you so much, Govi. So we'll just wait, everybody. We'll be stay tuned, and we'll be getting into the next session shortly. Thank you, everyone. Thank you once again.
I can't get my copy. Okay. We are live now.
Thank you very much and welcome to this session. The subject of this session is something which is extremely relevant in today's times. It's about building trust in AI. And I'm being joined with a very, very esteemed set of panelists, which I will take a minute to introduce. So we have with us Mr. Krishnan Ramachandran. He is a CEO of Niva Bupa. Thank you, Mr. Krishnan. Then we have Mr. Vyom Upadhyay. Vyom is the head data science and analytics group, ICICI Bank. Then we have Mr. Sabyasachi Goswami. Thank you, Sabi, for joining us. Sabya for joining us. He is the chief business officer at Perfios. And then we have Mr. Anurag Vora, who's leading the core trading solutions at NatWest. So thank you very much, Anurag. So this is fantastic, and I am Sudipta Ghosh. I'm a partner in PwC, looking after data and analytics. As you know, that we are talking about trust in AI, and let me kind of give a bit of a context and the background. So when we are talking about trust and financial services are almost inseparable. From time immemorial, if there is one value on which the entire industry is predicated upon, and that is trust. People trust with their money, with their savings in the institutions, and that is something which is extremely fundamental. At the same time, when we are talking about digitization, we are talking about new solutions, we are talking about AI-based solutions. Trust is automatically becomes the most important factor for anything which we do, and any solution or any application which we build, whether we use AI or we don't use AI, it is important that we are in a position to build trust in those solutions. These solutions need to be trustworthy, not just trustworthy for the customers or clients, but also for the employees, also for the regulators. We are talking about an external ecosystem of stakeholders who are looking at how the financial institutions are working and behaving, right? The other important factor is that we have to also look at the hype from the reality. If we really want any of the AI-enabled solutions to achieve scale, the most important thing around that will be whether people adopt it and use it. And one of the reasons why people will adopt and use it is that if they implicitly trust. Now, while we are talking about trust in AI, why trust becomes an important aspect in AI? Because AI is a slightly different type of application than usual applications. Unlike other applications where you write a piece of code and things happen in a very, very specific manner, because you have written the rules, you have written the code, you know exactly how it is supposed to behave. For AI-based applications, it's a little different, because it is not that you have written a piece of code all the time. If it is a deep learning based model, the algorithm is getting built and refined and changed over a period of time based on what data is coming in. Because it is like that, it is a little difficult for everybody to understand what is going on. And if you really do not understand what is going on, it becomes a little difficult for you to build trust or assume that it is going to work in the same way going forward, which is why the topic of AI and trust becomes even more germane and pertinent in the context of financial services, right? So with that bit of a background, I would like to invite our first speaker, Krishnan. If you can share from your perspective, what are some of the initiatives which you are either involved in or you are seeing either in your organization or in the sector, which you may want to share with all of us. So over to you, Krishnan.
Thank you, Sudipta, for that introduction. I will pick up this topic of trust in the context of a few things that we have done as a company. And I'll pick specifically three topics that where we have applied AI or machine learning or algorithms, whatever it is that we want to call, and how we went through this whole journey of building trust. And I'll use employees as the audience and users of what we've done to illustrate what I mean. So specifically, as a company, we use a recommendation and a risk assessment engine at the time of sales. These are three examples I'm picking up just to sort of showcase the journeys. Second is, there's a churn engine that we use to predict who's likely to not renew with us. Our product is a subscription product. And the third is claims is the single largest cost item that we deal with. So we have an engine that deals with triggering what's the propensity of either a fraud or an abuse situation. And really trust, and all of these, at this point in time, we have embedded into the operating process. So it's, process intelligence into the process, if you will. But it's been a journey to get there from the point of view of the core audiences, who are using this on a day-to-day basis, which is the employees, be it sales staff, be it the claim staff, or be it the retention team of the company. And really, from a trust standpoint, a few questions that came up as we started this journey. I guess the first is, does it work? Does it work consistently? And is it better than my judgment? So imagine an underwriter or a claims adjudicator who's being told that, look, here's an algorithm that when pitted against you is as good or better than your judgment. And for an underwriter in insurance, there is art and science. So here's a new technique which is sort of saying something is as good or perhaps consistently better than your judgment. Claims examiners who are used to, again, looking at patterns and figuring out what to trigger for a fraud situation. Again, it's the same question. And for the salesperson on the ground, can you actually tell me what this customer needs better than I could, leveraging my own sales experience? So I guess the first question around trust is, does it work better than my judgment, and will it consistently do so? Second, I guess the second question which comes up is, will there be bias? Will this work across, the variety of situations we encounter in the real world, or is this something that works in a room but will not work in the real world? And I guess the third question, which was not stated but implicit, was the question around, will this help me or will this take my job in time, right? So I think trust at these three levels is sort of what we encountered as we went down this journey. And just in terms of the approaches that we took to allay, mitigate these concerns, and then eventually embedded into decision making, I think the first thing that we went about was as much as we could, being transparent about what we're trying to do and why it was ultimately going to be useful to the employee. And the way we did that was to actually pit, do a lot of back testing where we had human judgments, human recommendations about how to go about doing things vis-a-vis what the algorithm threw up. And that, was a slow process where we were able to sort of convince them that, look, this is only going to help you in time. So for example, when we started to use, credit data to impute affluence scores, we were able to demonstrate to our sales team that they were consistently underselling, relative to what they could be pitching to the customer. With the claims team, we were able to demonstrate that, look, the algorithm actually, has a better value proposition in terms of lowering trigger rates and higher hit rates, so that you have eventually as good cost savings but lower friction from a consumer standpoint. So lots of backtesting, human judgment versus machine judgment, so to speak, to demonstrate that this does work, this works consistently. And I think the other thing that we did was to skill or train to the extent that people needed to understand this better, so that they could appreciate and use it for their benefit. And also, the whole argument about it does not replace human but augments human beings, right? And through the journey, over the last 2+ years, I think this is the journey that we've traversed, and these are some of the issues around trust that we have encountered and how we tackle them. And I'll pause and stop at this point, Sudipta.
No, fantastic, Krishnan, for articulating very well. And I would say that, yes, if you look at the stakeholders from an employee perspective, whether it is an underwriter or a claims examiner or somebody who's from the sales, it's important for them to trust the AI solution, that it is going to do at least as good a job as they are, if not better. And it is a reliable application. For example, if it kind of helps in terms of reducing the cost or increasing the margins or reducing the churn, as you pointed out, then people start getting the trust in that application anyway. So trust and adoption and usage go kind of actually hand in hand. And the rigor which you talked about in terms of backtesting and etc. is something which is going to be extremely critical for these applications. So thank you for that, Krishnan. Just taking that conversation, to the next kind of topic or to the next level there, would be great to hear your views there, Vyom, in terms of what is it that you are looking at? Because from your perspective, it is a much wider landscape across a number of different product solutions, customer base, etc. And will be great to understand from you the trust-based solutions, particularly in the context of AI, in terms of your experience and your perspective.
Sure, Sudipto, and first off, many thanks for having me here. As digital India is growing rapidly and lots of data footprint is being created, I think it's almost natural to see how AI will be able to AI and related technologies would be able to start making use of this data very intelligently and of course as you mentioned in the bank at ICICI Bank also we have a large number of AI driven use cases right from let's say personalizing the experience for our customers to risk management where as you know when we grant loans etc to manage those loans and all that. So trust, Sudipta, is a very interesting topic because in the context of automation also because you know the previous waves of automation they were really replacing what the hands and legs could do, and so in that sense, hands and legs were willing partners in that whole automation journey. But when it comes to mind is a and decision making, that's a slightly more trickier area. And so trust, managing the area of trust becomes very critical. And to my mind, I think there are three ways in which one builds trust, right? One is understanding of the past, what you've been doing in the past, so understanding the track record of AI in that sense, right? Secondly, just knowledge or familiarity of what the AI is up to, right? So knowledge, familiarity gives us then the second layer of trust. And the third level of trust comes from the ability to control it, right? So think of the experience of writing or any such area where you're trying to exercise some bit of trust is coming from the ability to control that piece. So if you think about it, I think some of the use cases that we do in banking, they're for example, the ability to access bank 24/7 and have a rule engine that is deciding on a low application 24/7, 365 days a year. That's a use case which has been on for quite some time now. So I think there's a bit of familiarity around that now, as around some of those use cases, and hence it's easy to imagine how as some of these use cases just we spend time interacting with them. We will start building trust around them because we understand over a period of time, right? We think nothing of turning left or right when we are trying a daily commute just on commands of AI driven voice. So and hence with this kind of familiarity with trust. Second part is really knowing what's behind what's behind the AI, what is the kind of things which are driving that AI, and that's sort of more I think it's very different compared to how the previous ways of automation. Like you were driving school, nobody expected you to understand how an internal combustion engine works. But of course, AI can work very differently, and part of the reason for that is that the context changes very rapidly. A context in which the decisions are being made change very rapidly. So, for example, when it was the time of moratorium and the COVID pandemic, we had to change a lot of our models in very rapidly to make sure that they reflect the new realities, the realities of the working environment, the realities of the risk management scenario, and how
You may
everything was
want to
unfolding.
switch
So I
off
think
the.
unless you understand what's behind those wheels, it's very difficult to then identify when the decision making scenario changes, what components will change it. Sure. Okay.
You may want to switch off the video. It's kind of
Yeah.
breaking a little. If that's
So
okay with you.
it'll be difficult to understand what to change and then what is. Okay. Sure. Am I audible better now? Hello.
Yes, yes, that's much better view. Thanks.
Okay. No, so I was talking about the area of knowledge and familiarity, where you need to understand what's behind to be able to change it then, because the decision making environment changes very, very rapidly, and just been through a 2-year experiment of biggest changes in decision making environment. And third one is the ability to control, right, where if you are able to control as a user what is being presented to you, the amount of trust that you can place in that AI goes up significantly. So to do that, what we are trying to do in our bank is exposing some of the scores, etc., along with the underlying factors to the end users, to say that, okay, if you, for example, these are the 2 or 3 kinds of behavior, if you were to do those, your scores would improve, and hence your ability to get credit, and hence the overall relationship with the bank. So I think those are 2 or 3 factors which are very important when it comes to building trust with it.
Absolutely, and thank you for sharing that perspective, because it's very important that you have an ability to change, because our external environment is changing very rapidly, as you mentioned, with the onset of pandemic, and now with the onset of geopolitical risks and everything else. Every day is a new day, so we need to change, and we also need to have the degree of control that what we are changing. And that is something, if you are unable to do so, or if we don't feel confident enough in doing that, then clearly the trust takes a back seat. So it's very important for us to do that, and that's where probably a rigorous process of how you build, define, deploy applications which are AI enabled becomes that much more important. So thanks for sharing that, Vyom. Now, since we are talking about the trust, we are talking about the control, and how we are going to improve things going forward. And let me now bring up the next speaker, Sabya, from the perspective of how you are seeing in terms of the need for the organizations to have better control, better trust, better ability to drive things, and what has been your experience working with your organization and with your customers?
Thanks, Sudipto. And first of all, thanks to the Vicky and Sudipto for giving us the opportunity to come here and speak about what and giving our perspective about what we feel. So first of all, what Krishnan and Vyom says, I echo the same sentiment that trust is crucial for UI to succeed. And how I feel, I mean, I would try to draw an analogy that like AI is going to be ubiquitous as electricity is, right? It will become a very integral part of everything. I think for a country like India, which has this kind of size of population, AI is sure to change the way we receive the customized services. And hence, what becomes most critical is the quality of the data uh, and the security and the privacy concerns, and how do we manage all that. And hence, what comes into forte is the trust. Now, because AI runs on data, it requires continuous ready access to large volume of data. And a company like Perfios, which handles a large volume of data on a daily basis, it has to flow freely to disparate systems, basically, to effectively train and execute the AI model effectively. And hence, if I see the future, and I was reading some study a couple of weeks back, that by 2026, that research report says almost 60% of the business organization will combine human expertise with artificial intelligence and NLP and pattern recognition. Now, and hence, for AI solutions to be transformative, trust becomes imperative. And I would say that if I can call that there are four critical pillars for trust, which will help organizations drive greater trust among all the stakeholders, which is their own employees, their end consumers, and the data scientists. And this is very, very critical. And I feel how we are approaching as an organization, the first part and the first pillar is like integrity. It is super critical that the algorithm integrity and data validity, including lineage of how the data is used, is maintained and appropriately maintained. The next becomes, which is, I think, a lot of people are talking about it, though I am yet to see. However, we have made quite a bit of progress there is explainability. And now, what the solutions that we have created and how it is not only transparent in understanding the decision-making process in simple terms, but also the end consumer, we go to the end consumer and say why this has been done. Now, it is yet to see some traction there, but I think that's where the world is moving. The third being fairness. There's a lot of bias there, and I think ensuring that the AI systems are ethical, free from bias, free from prejudice is super critical. And as we are dealing with multiple data, you need to train with diverse data sets. And unless you do that, I don't think it will be fair, both in terms of data labeling or the using data scientists has to be from diverse background to get that fairness bit incorporated. And the last, I think, is resilience. The technology, the technical robustness and compliance of your AI and its agility across platforms and the resistance against the bad actors is kind of make sure that how resilient is your AI model, honestly. So I think from all of this, though there is a lot of positivity, however, I have a little different view. I feel that a do or die relationship with AI is not the right approach. Maybe measured skepticism is good. And as we all know, we don't have, none of us maybe across industry have all the right answers. But I mean, it is a good sign that we all in the industry are coming together and different policy stakeholders worldwide are engaging in different conversations. And primarily because we have seen in last, I think, more so in last 18 months, and Vyom stated that very clearly in pandemic, we had to do rapid changes in the industry, in the financial space, because the detection of financial frauds are increasing day by day. And this is primarily due to the fact that the digital adoption is increasing. There are new digital channels, there are new payment devices, and it leaves a lot of loopholes to be exploited by fraudsters. And now, consequently, cybersecurity incidents in India have grown significantly and resulting into huge losses. So I think what we as an organization, maybe I make that last point, we are actively working on federated and incremental setups so that the data need not travel, but the model travels. It is a difficult task, in fact, a very, very daunting task, but it will enable higher adoption of AI in domains where the data is highly sensitive. And I think that's how maybe this is a step forward that we are taking. Hopefully, that's how the financial industry will move going forward. So we can stop there.
Great. No, thank you very much. I think you brought in a lot of important concepts here, which I think we will probably deliberate subsequently. Concepts around the fact that you need to understand the lineage of the data, explain the model, ensure that there is an element of fairness built into the model, and also the resilience you spoke about. So I think these are all very critical aspects of how do you build trust in an AI solution. I think we'll come back to that with some more detailed conversation around the same. But in the meantime, I'll be very happy to invite Anurag for Anurag to share your thoughts in terms of what you are seeing and what you are doing in this space and what are your plans and perspectives.
Sure, Sudipta. And by the way, as with everyone, so many thoughts on the topic. You don't have to wait for me to stop. Please feel free to cut me at any point and say we have to move on. a lot of what I have to say will overlap with what others have said. Some elements are different, right? So when you look at stakeholders, whether it's internal stakeholders or our customers, I think there's been a lot said prior to me. Perhaps as a UK bank and not just unique to NatWest, but any bank based in UK or EU, the regulator perhaps proves to be a very, very important sort of stakeholder in that. And even there, it's a regulator in the sense that you've either, all right, will the PRA come and ask me a certain question and how will I answer that? But actually the broad regulatory framework of GDPR, right? So that's integral to absolutely anything and everything that we do in this space, right? So here, so the interesting dimension when you talk of trust and sort of trust and bias, we sort of use interchangeably when we are having those discussions. It's as much about us looking at ourselves and saying, are we doing the right thing? But also looking at, all right, we think what is right versus, all right, what does the regulator say what is right? Because at this point, the regulatory framework is quite prescriptive, right? So when you balance that, so then taking it at two different levels, at a conceptual level, honestly, it's quite unclear what AI bias would really mean, right? And you have enough debates on this because say all machine learning systems use patterns in data sets to make predictions, right? Now, which pattern would qualify as an undesirable bias and that we shouldn't use as opposed to a valid pattern, right? Or a useful trend or a useful pattern that we can actually base our algorithm on, right? Now, it's an interesting one. If I think of it from an Indian context, anything which gives us good results is a good pattern, right? And both in terms of backtesting as we go forward. However, when we look at from a UK or a Europe perspective, discrimination is when the bias is against the legally protected attributes. So there are legally protected attributes. We cannot use a gender, age, race, etc., right? Whereas otherwise, or a life cycle event, if we take, all right, mortgage prepayment, and you may say, there's a high sort of correlation between someone going through a divorce or a marriage and their propensity to prepay a mortgage. But can we actually use that information and build it into any decision-making process, whether it is a very simple algorithm or whether it is a complex machine learning algorithm? The answer is no, we can't do that, because that is, or we sort of have the elements of the person has to explicitly consent to that information being used, and we have to be able to explain how that information is being used, right? So that's the scenario, that a slightly different dimension that I would bring to that, right? So, and hence in that, you're always the sort of, now when we talk of trust, again, there are two elements, right? One is the algorithm itself, right? Are there biases built into the algorithm? And there are some very simplistic examples one can use to explain that, but it's easy to say, all right, how do we ensure that that does not happen? I think there are easy answers. The trickier one becomes data, right? So first off, when you look at data, I mean, as a person who's a lot closer to technology, getting good quality data and us being providers of good quality data, that's always a challenge. How much data do you have? What is the quality of that data? But then in the context of trust, it becomes, how do we make sure that the data itself is such that's not biased? If I'm not mistaken, Sabya made a reference to that just earlier, that you can have your sort of, every data will give you a certain sort of inherent sort of conclusion. One is, of course, the early element that we said, that in a regulatory framework there are certain elements like gender, race, and so on that we cannot use. But equally, how was the data set collated? What is the quality of the data set? Is the data set wide enough? And does it sort of, does the data itself bring in certain biases in what results the algorithm produces, right? So that, I would say, is while a lot of what we are working on overlaps with what my predecessors is, this is sort of one dimension which is different given the regulatory framework we're in. And I'll pause there. Yeah.
No, that's fantastic, Anurag. And as I was hearing you, I just couldn't resist myself asking this question to Vyom, because we are talking about the banking as a sector which has regulators playing a much bigger role in terms of what is considered as fair or unfair and what is considered as biased, unbiased, and all of that. So in that context, Vyom, is it like too much of a burden for us to define the rules of fairness? Because somebody can argue and say that, well, we did not invent 36 different definitions of fairness. Why are you asking an AI algorithm to kind of do that? Or you think that this is an opportunity to differentiate and say that, well, this is how we would like to deal in a fair and square manner, and hence this creates a differentiation for us in the market, rather than just trying to kind of build more efficiencies and more revenues going forward. So what would be your perspective, Vyom? I just wanted to kind of take that conversation which was started by Anurag.
Sure. So, am I audible, Siltu?
Yes, you are now.
Okay. Okay. Yeah. So, see, the way to think about AI regulation or regulation of any kinds, that first of all, I think the objectives are very, very clear. We need to be fair to the bank and fair to the customer, right? So with those twin objectives, if we are working towards being fair to the bank, which is ensuring that the credit decisions are made in a way in which the obviously there are only minimal NPAs, etc. And at the same time being fair to the customer, which means that the decisions are made in all fairness. That for example, you know uh, 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 you know uh, 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 people who are elderly are not penalized, etc. So if those boundaries are well set, right? If the boundaries are well set and well defined, and where I think regulation comes in a very nice way, and just to retrace that, I don't think these are new concepts, right? These concepts of being fair to the customer have existed long before we were discussing AI as well. It is just that a new tool has come in and it has to be regulated similarly, right? The concept of fairness doesn't change because the tool of decision making, it has to be explainable. Hence, you can't penalize customers for who they are in a lot of ways. Uh, Now that said, a broad framework has to be set. But if I just come back to the session which was happening before this one, which is where I was listening to Miss Anna Roy from Niti Aayog, I think within this broad structure, because as Sabyasachi mentioned, it's like electricity. It's a very, very new and nascent evolving field. The focus also is, as Ms. Roy mentioned, to make sure that innovation doesn't get stifled within these broad parameters, right? Because if we start looking at two micro perspectives, right? At this stage, it is so nascent that we might even know what are the possibilities out of the technology and what are the kind of use cases, right? As was the case in early days of electricity. So I think that's sort of the balancing act here, which is to make sure that there are boundaries on fairness, there are boundaries on explainability, there are boundaries on being right fair to the customer at all points, but at the same time not going to micro and making institutional frameworks determine those fair outcomes for the customer. I think that's for the balancing act at this stage.
Very well said, Vyom. And I think this balancing act is absolutely critical because we don't want to stifle innovation with a lot of rules and regulations. Although they are important, we are not saying they're not, but it is important to balance it out, particularly during a stage when it is growing and it is a little nebulous in terms of how it kind of shapes up in the future. So taking that point forward, maybe I'll invite Krishnan, your perspective. You did mention a lot of business cases or use cases around which you have seen the success in your organization in terms of people having got benefited from an AI-driven algorithm or a model. However, would be great to understand the balanced perspective in terms of where do you see the end game is? What are, in your opinion, some of the additional things which needs to be done? Are there any challenges at all in this journey as you foresee it? How do you think it's going to evolve in the future in terms of this balancing out between the ever increasing presence of regulation and also the need to innovate fast and quick because of the changing external environment?
I think I was reflecting on the comments made by all the speakers, Sudipta, and the one thing that strikes me is, let's just step back and keep specifically the question of AI aside. But when there's a change, specifically a change that's brought about by new technology, there's always a process to the adoption, embracing, and eventual, that change becomes permanent in society, right? And in that sense, when we look at AI, the algorithms, as Vyom pointed out, have been there forever. But the increase in data computational capacity means that there's an explosion in terms of the ability to use these algorithms, and it is a portent of significant change that can be beneficial on balance to human beings as we move forward. And I think this, it comes back to the whole management topic of change management, right? We have multiple audiences, and every audience has their, let me say, has their objectives, they have their fears. And I think, as, let's say, companies or organizations that want this change and see this as beneficial, I think the whole change management agenda addressed at each audience is therefore, in my mind, very critical, specifically to your point on how do we move forward, right? And the whole process of buy-in, and we have discussed a number of topics that we need to, hit upon if we have to make sure that this change is permanent, beneficial, and has the buy-in of, ultimate users. So whether that's skilling and education, whether that's communication, whether that's taking progressive steps. For example, if I take the example of medicine, which is an allied field to my own industry, doctors, the complaint is the last to use technology, but it's also perhaps the one field where it's the most beneficial. So how do we take progress? And companies like Google, Apple, the likes of IBM have tried to deploy AI in medicine with varying degrees of success, but certainly not outright success at this point in time. But how do we manage the process of change with that audience, progressive small victories, through all of the points that my esteemed co-panelists have addressed, I think is going to be critical. So this whole topic of buy-in and change management, keeping in mind the concerns and fears of each audience, I think is going to be critical as we move forward in this journey.
No, absolutely. Couldn't agree with you more on that, because on one hand, there is a need for a change. On the other hand, there are also fears as well. Fear of doing something wrong, even fear of losing the job, and many other such fears, stated and unstated fears, which is going to be extremely critical and important. Anything new you do, there is always going to be that resistance.
Just to illustrate starkly, right? Human beings are going to be more error prone and cause more accidents, when driving a car. But the reality is that, a self-driving car in an accident causes much more news, speaking to this whole point on trust.
Absolutely, absolutely. And if there is even one fatality in that self-driving kind of a car, it kind of causes much more concern that what kind of algorithm was used for kind of driving that car, etc. So you're absolutely right, and I think the algorithm cannot afford to go wrong at all. Even a small mistake will get highlighted in a very big manner. It's also the fear of uncertainty in terms of what it's going to do in the future, whether it is doing in a more stable and controlled manner, as we heard. So I think let us take this conversation to the next level. Anurag, we know that. I'm coming to you, Anurag, because you mentioned a few important points earlier. And whilst we all understand that there is a change, we understand there will be need for doing something different and new. Are you seeing any trade-offs? Like, I'll give you an example. People use an algorithm because it is more accurate, right? But whilst chasing for accuracy, you may lose the explainability of the model as well. So there could be some mathematical trade-offs. There could be some trade-offs around the technology, could be on the process. So is there something which is going to be a bit of a concern for us, because we will be a little constrained by our ability to just go on a complete innovation, because there will be inherent trade-offs between what we do and what we don't? Or you think it in a more optimistic manner, saying that, well, you are going to enhance the boundaries of as we call it from an economic perspective, and those trade-offs will not really be so much of a trade-off, that they'll be more like opportunities. So what's your perspective in terms of moving this forward?
Brilliant question. I think it's a combination of both, right? Which is very optimistic, but there are trade-offs, right? There's no doubt. I don't think it's one or the other. Um, the element that you said, the one difference when we say these algorithms have existed forever, honestly, the one difference that you come, and that's a very common thing. The more closer you go to anyone who's sort of closer to working on AI and so on, they say, you know what, most of this is statistics. It's not really AI, and that's actually true. But it's true up till a point, but then when you move into proper machine learning, self-learning, neural networks, and so on, what happens is it goes from being a white box to a black box, right? So it's tricky when you are asking a question to a black box, and then even however frequently or infrequently, when that black box gives you an incorrect answer or an answer, and that's where the questions are much bigger, that okay, hang on, what's going on, because I don't understand what's happening internally, right? So that's just the initial element of where that is. It's not, and now then it becomes, all right, where do we sort of classify? There's so many different kinds of use cases, and there'll be some use cases where you can have what I would call unconstrained innovation, right? Because the downside is very limited. There are some use cases where actually you can have unconstrained innovation with small checks and balances. And honestly, the best example of that is not even from my field. It's actually, if I can pick up from what Krishnan just said, in the medical field, right? Where I had the opportunity to see what Arvind Eye Hospital, they're based in Chennai and in Madurai, and what they're doing in partnership with Google. That's quite amazing. And their thing is, you know what? Okay, with 99% accuracy, we can give you an answer in 1 minute. So let's give you that answer. And if the answer points to some problem, then let's add a manual check of a doctor after that, right? So there are examples like that are really powerful. And so you want to get to a point of that 99. Now, even getting to that point, of course, there's a lot of regulation in terms of what data you can use, which data you know, and then you have to have the double-blind studies and things like that in terms of what you can do to arrive at that point. But it's brilliant sort of examples which are much more powerful than say what many of us are working on, which is, should we give a loan to a client or not, right? So when you see the two extremes, you're like, okay, fine, but still when you give a loan to a client or a company, it's still sort of make or break for them. So it's still an important decision, but you have to sort of be able to justify. So when I look at within us, when we look at algorithms which are, say, for internal improvements, whether it is for internal controls or for process improvements, or what I call conversational AI, but conversational AI for sort of processing faster and better the request from a customer, there are no constraints, right? We can use as much as we can let ourselves use outside. We're not, the no constraints being put, right? Or from our own perspective of the age-old problem of customer lifetime value, right? You can sort of use, you can however, when it comes to decision making, a very specific example, mortgage prepayment, from our perspective, it's actually not a tough problem to solve. But then you put regulatory constraints, it's become, you know what, we're not even going to go there, because all the fields that you would typically use, right, your gender, your marital status, your age, and so on, go away. And sort of reminded me, when I was in the US, it's very clear, if you're under 25, you'll pay higher for your car insurance, and the moment you sort of cross your 25th birthday, your insurance goes down. And that's a very age-based correlation that was built into insurance in the US. But now from a UK regulation perspective, that's just not allowed, right? So you have areas where the constraint is a very hard constraint. There are areas there. A third is like we sort of face liquidity provisions that we have to do, and that's where, as long as we're using an algorithm that is explainable, we can use it. And that's because that's a regulatory conversation. What we cannot use is an algorithm that is more of a black box. You cannot go into neural nets and so on. But yes, you can use fairly advanced statistical techniques to optimize your provisions and to explain it to the regulator, and they can then have a view whether that's right or wrong, right? So it depends on the use case. Hopefully these classes, I mean, sorry, but someone mentioned fraud prevention and anti-money laundering is actually a brilliant example where everyone would be supportive of using that. And then again, within our industry, having, you know, unconstrained sort of investment on AI to see, all right, can it give us better results or not, right? So I'll just pause there.
No, absolutely fascinating, Anurag, and I wish I could have more time to kind of discuss on this topic for long. However, we do have a constraint of time. There is one question which has come up, and maybe I will direct that to you, Sabya. It is around the fact that how is it that academia is playing a role, or what kind of ethical practices in AI you are seeing, and whether that is going to result in better transparency across. So the question is more around ethics and AI and the role of academia. So Sabya, if you can answer, or anybody else wants to answer, it's okay. This is just one question which has come from the audience.
So I'll try an attempt, and maybe my other co-panelists can answer and add to what I say. See, I keep reading on this subject because I personally carry a lot of interest. Uh, See, algorithms have grown kind of considerably over years, and it has become more complex. And what that means is that there is an impact of human bias, and the problem can become worse when you try to bake in and deploying biases at scale in sensitive application areas. And I think there comes the role of academia, where uh, they can understand the different uh, biases that exist, and how they can kind of train the next gen data scientists, data labelers, that what needs to be done next. And uh, around regulation, if the academia can play a significant role in kind of facilitating the operators and kind of facilitating the regulators to bridge the gap, because kind of it can be assumed that they are neutral, unbiased parties, and they would help kind of bridging the gap between industry and regulator. Now, let me take an example here, which I think academia can help and would have helped or should have helped. Like, if you have seen that there is a lot of training data that is required, and I think the educational institutes can facilitate that as well in some of the industry dimension, not everywhere. But like, if I take an example, very recently, Amazon stopped using a hiring algorithm that they used to kind of use for quite some time. And after finding that the application that they built and used favored applicants based on words like executed or captured that were more commonly found in resumes of men. And this was kind of bias and flawed data sampling. And there are experiments which globally, I mean, I don't know in India whether there are academia that has come forward to that level, but globally, like MIT or Stanford does multiple experiments on this, and like they do on facial analysis, they do on kind of this kind of biases, kind of representation on the women minorities. So those are areas where academia can contribute to a very large extent, so that the biases gets reduced, and the data sampling methods are kind of appropriate. So I would say they play a very significant role, but our country needs to pick up and learn a lot from universities, which is kind of doing, and primarily two comes top of my mind is MIT and Stanford from that perspective.
No, thank you very much, Sabya. And I think we had a fairly, very content-driven, enriching conversation. We spoke a lot about the different use cases, the benefits. We talked about the risks, talked about what kind of controls we need in order to ensure that it behaves, the AI solutions behave in a proper way. We spoke about the lineage, the explainability, fairness, resilience of models. We also spoke about the change management and also the opportunity it presents to us in terms of leaping to the next stage, or next stage of development. So I think it was a fairly interesting and very enriching conversation, at least for me personally. So I would like to really thank all the fellow panelists for coming over here, spending their time and sharing their experience, which is the most important part of all of us, to kind of understand how this is being put in motion in the real life. And I'm sure there'll be many more questions and many more queries from our audience. And I think we will be able to pass it across in an offline mode, so that we can kind of answer all of that. But for the time being, we will kind of take a pause and My big thanks to everyone for coming over and participating in this panel. And thank you for all the audience for asking a lot of questions in the session. So with that, we will close this session with a big thanks and a lot of gratitude to all the fellow panelists.
Thank you.
Thank you.
Thank
Thank you,
you.
Sudipta. Thanks, everyone.
Thank you.
Over Janine, we are live now.
Thank you and good afternoon. I am Rajnil Malik, a partner with PwC's technology consulting practice. Building an ecosystem of AI-driven innovation is a very relevant and timely topic. To get started, first a little bit of context. While AI has been around for a while, it is now becoming mainstream in financial services in India as well as globally, as we all know. And it is no mystery that the technology, the data, the science, the infrastructure, they're all changing very, very rapidly, aided in part by Moore's law. And this is in turn transforming use cases, skill set requirements, and completely different entire business models. Consequently, the opportunity is immense, and a large group of players, of course, the financial institutions and the government, but also fintech startups, regulatory bodies, research centers, chambers of commerce, consumers, employees. I mean, this entire ecosystem needs to come together to make this opportunity equitable and democratic, really. Now, this is especially true in the financial services sector that holds people's hard-earned money, right? And many of the esteemed speakers in the earlier sessions talked about making sure that we take care of the emotional aspect of faith and trust in the Indian financial services stack. And AI is not a straightforward journey. In the paper that we released, there is a fair bit of concern about privacy, about data protection and data privacy, and data security and availability. And there is a huge amount of experimentation, as we all know, that's going on in AI. And so therefore, there's a need to balance speed and trust. To discuss this fascinating topic with me, today I have a very, very distinguished panel. Going alphabetically, first, Mr. Abhishek Sharma, who is the Chief Digital Officer of L&T Financial Services. Mr. Sharma leads L&T's group strategy and digital transformation initiative. He has 15 plus years of experience in corporate strategy, in product development and sales leadership. In his past life, Abhishek has served as a captain in the Indian Army for 5 years. He loves reading and he's a sports enthusiast. So welcome, Abhishek, to this panel. Secondly, Mr. Avinash Raghavendra. He is the Executive Vice President and Chief Information Technology Officer at Axis Bank. And it's very relevant for today's conversation. Avinash, as a problem solver, he believes in working in collaboration with teams to deliver technology solutions that achieve high impact business goals. He has over 20 years of experience in Axis Bank across a diverse set of roles in IT management and technology transformation. He too is a very avid reader, and I'm told he's a movie buff, and he loves to spend free time traveling with his family. Avinash, welcome to the panel. Girish Nayak, he's the Chief of Customer Service, Technology and Operations for ICICI Lombard GIC Limited, which is the largest private non-life insurer in India. Mr. Nayak is responsible for managing technology, operations, and the customer service function, which he has the responsibility for overall quality of service delivery. He's been with the ICICI Group since 1994, and he's moved into this current role in April of 2013. Welcome, Girish, to this panel. And finally, Mr. Nimesh Mitha. He's the founder and CEO of Rockmetric. That's a firm that works in artificial intelligence, AI, analytics, and automation. He has a very varied background and has previously founded startups in education and enterprise SaaS, software as a services model. Before Rockmetric, Nimesh set up and ran the research at the Center for Emerging Market Solutions at the Indian School of Business. And welcome, Nimesh. So maybe what we do as part of the conversation is first understand, what is the ecosystem looking like today? And maybe, Girish, I should go to you. What are some of the players that you see that are playing a substantial role in the ecosystem today?
Thanks, Rajil. And the ecosystem is quite large and quite vibrant today. And you have various kinds of players out here. And since I have other members of the panel from banking and other financials, I'll try and narrow down my this to the insurance and how I see that space. So if you look at the entire ecosystem of startups, you'll see that large amount of funding you see going into e-commerce or fintech startups. But insurtech as such is quite low. It's I think single digit in terms of there's about 8 to 9% of the funding goes into insurtech. So, and in the insurtech space also, what we see typically is that almost greater than 96% of most of these startups are concentrated on one single aspect of insurtech, which is the distribution part. This is very unlike, say, developed markets like US and Europe, where you have a lot of startups who are looking at the other aspects of insurance like risk mitigation, etc. We are still very much focused on the distribution part of it. That's why when we, as a company, look at our interactions with startups, we can look in the adjacent space rather than just at insurtech. We do collaborate with a lot of partners in the fintech and the insurtech space, but we also need to look at the health tech space, the agri tech space, the legal tech space. So all these are having startups which are able to collaborate with us and provide us solutions to address some of our downstream requirements, which is basically risk management and claim processing. So when we look at just the insurtech space, that's kind of constricting the whole size of the ecosystem. But when you kind of expand it beyond fintech, insurtech, then you get into a whole range of other spaces which also have a good deal of potential for us to collaborate with. And we do have a program that we've been running for the last 5 years, which actually goes out seeking such startups who are working in these adjacent spaces. Over the last 5 years, we would have kind of gone through, we have engaged with about 500 odd startups, and we would have run about 60 odd pilots, out of which typically 1 in 3 of a pilot we end up actually putting into production. So around 20 odd, but all these are not, you won't find them in a standard insurtech definition. They kind of all fall under the adjacent spaces that I spoke about.
Terrific. Thank you for that, Girish. Maybe just to take this a little bit further, Avinash, maybe I'll bring you in here. Girish talked about the broader ecosystem, but yet there is some players being very narrow in what they do. What are your views on maybe big tech players in FS? So you have seen this industry for a long time. In some of the areas that Girish talked about, what are you seeing in terms of maybe not just the adjacent players, but maybe also the big tech players playing a part?
So Rajnil, I think AI as a space is truly democratic, right? I mean, I honestly don't think there is too much over here which gives an edge to the big tech players over the more nimbler fintechs which are actually sort of coming up. What I've seen is that it's basically a mix. I mean, as a bank, for example, when we have to sort of determine in terms of which is the path to be chosen, we are actually going for the best product or best service provider out there. And more often than not, I am, from whatever I can see over the last 18 months or so, I don't think we are actually able to see too much of an edge when it essentially comes to the larger big tech players. If you speak about the big tech players, I mean, then we will have to look at it from a cloud service provider ecosystem perspective, right? I mean, they are the guys who are sort of agglomerating virtually every service which is out there and are actually in a position to sort of, thanks to the limitless compute and thanks to the limitless, in a way, even the monies that they have, I mean, they are actually able to do far more than what maybe the smaller guys are essentially able to do. But otherwise, if you were to look at it, I mean, from an AI capability, most of these solutions are, slightly point focused, right? I mean, the way to look at it is there's a bunch of guys who are working on document extraction and intelligence. That is where maybe the ant works, the clear eyes of the world, etc., sort of focusing on, right? And you will have some services of this nature which will be there on all, be it Azure, be it Google, or be it AWS, right? Very similar, from a point solution perspective, people have sort of focused in terms of extraction, web crawling, semantics, visualization. It could be around simple AI-based narration, which could be NLU or it could be NLG, or for that matter, from a perspective of sort of tying up the entire workflows. It could be as basic as automation, and then again we go back to the automation anyways and the automation edges of the world. So to answer your question, I think it is horses for courses kind of a philosophy that most of the customers are sort of looking at. I mean, even in my conversations with fellow CIOs, I don't think there is an edge that I see from the big tech players perspective. But yes, the CSPs are actually able to create a catalog of services, which makes it a little easier for you to go and pick and choose.
Terrific. Thank you for that perspective, Avinash. So cloud clearly is big. Maybe Abhishek, I should bring you in here. What are some of the capabilities that you are using the broader ecosystem for, and what, in your opinion, is working well today?
Thank you, Rajnil. So we see at a concept level potential of AI being used all across the value chain, right from marketing to people management. However, where we have seen actual success is much more around image processing and geospatial technology. That is the two key things that we focus on. We have been able to build a substantial number of use cases around it, and that has enabled lots of automation as far as process is concerned. I guess Avinash was talking very correctly on this aspect, that perhaps the users is much more around efficiency driving at this point of time. And then as world progresses, as things sharpen up, let's see how it plays out.
Fantastic. Thank you. Nimesh, you are in the you are one of the fintechs which is disrupting this. What's a good mental framework to think about to answer when, what, how to buy? I'm not sure if we still have Nimesh. Okay, I think he's dropped. But while he joins back up, maybe I should go to Girish. So when you think about one of these new applications, sorry, Nimesh, you're back. Sorry, I was asking what, in your opinion, is a good mental framework for the banks, financial services companies, broader players, to think about what's a good mental framework to think about when should they go, do in-house, when should they go to specific fintech players. Avinash mentioned about the cloud providers. How should people think about it?
So our observation, there are 3-4 things, right? The first thing that most of our customers are focusing on is cloud versus on-premise, and cloud also multi-cloud strategy, right? So when they're using platform services and point solutions from cloud providers, none of them want to get locked in with any one cloud provider for the long term, because it gets very expensive at scale. And at the same time, using these AI services and having portability across multiple cloud becomes a big challenge. So from a service provider and ecosystem perspective, if we want independence as an industry, we'll have to move towards a situation where we can port to any of the cloud vendors at will and plan for that kind of resilience, basically. Second aspect has been that the initial adoption of AI technology was largely customer centric, where we're trying to figure out back office and customer interactions. But most of the large players are now moving towards mid office operations. And that's where a lot of specialized is required. Girish mentioned, where you would need domain understanding, you would want solutions more than points, this thing. And that's where my experience with research with ISB and others was that in US, we have a lot of industry collaborations where faculty works with PhD students and industry to try and figure out new algorithms, new techniques for risk, fraud mitigation, new solutions to understand customers better. And these are long-term projects which academia can invest in, startups will, or corporates can't. So I think that is going to be the next big trend, and I don't see any process where industries used to this particular activity in India. US, it's a very mature ecosystem where they have sandboxes to share data with the university. And I think that's where FICCI can take a big role in terms of facilitating that process with the industry with some guidelines and setting up a activity. And the last aspect was one thing which was I found as an irony was that the industry is expecting solutions from startups and point solutions from corporates. And in the US, it's the reverse basically, where startups are focused on very pointed solutions so that they don't spread themselves thin and are focused on scale. And large enterprises are providing solutions. So I think that's something which is a little different in India. But that's a big opportunity for startups also to engage more deeply with large enterprises to try and get big ticket size deals. And the last point is, as we move from pilots to production at scale, what will happen is rather than having generic AI talent available in the market, which are largely application based, neither they're doing research or building algorithms, they're largely picking existing applications and trying to fill solutions. We'll need a lot more specialist talent in large corporates, to do data engineering, to work on SQL, to understand how to manage and optimize cloud expenditure. And I see that lacking in corporates today. So that training and grooming of talent, I see as the new next path for all of us.
Girish, I know you've spent a lot of time thinking about the sandbox and how the broader ecosystem, regulatory bodies, government, and so on can play a part. Would love to hear your perspective.
Yeah, I mean, we've spoken on this earlier. See, Sandbox was a great idea which the regulator had brought out. This was sometime way back in 2019, pre-COVID. And what it allowed you to do was there were a lot of products which, see, typically when you go to regulator with a product, you have to file the product for the retail space, and you need to give some kind of back data on why you would be charging this price and what would be the loss ratios that you would expect. So the idea was that you really, for some of the new age products, if you want to do something, say, based on telematics and so on and so forth, you won't have any kind of data available. So the idea was that you put this product out in a limited scale in the sandbox, and then based on the experience that you have, then you go back to the regulator and say that now you want to, based on this loss experience and this claims, I will now want to scale this product up, and this is how I want to do it. And so when the sandbox was kind of devised, they asked the insurance companies for application of what all they would like to trial in the sandbox. And there was a limit of, if I remember right, about 10,000 policies or premium up to 50 lakhs for the for each product that they approved in the sandbox, which was good. I mean, that's a very but the size was a limited this, so that the extent of the retail exposure also is limited. So the regulator obviously didn't want unapproved product going completely mass market into retail. So they had put those restrictions. But what happened subsequently is, I mean, some of these things, moment we launched, we in 2-3 products, we were able to meet the either the 50 lakh cap or the 10,000 policy cap within maybe 2-3 months. And the initial period of sandbox trial was 6 months plus extended 6 months if you so require. But unfortunately, after that, there's been a long pause from the regulator. We've not seen any of the approvals for further scaling of these products coming, and that's where this idea was great, but the logical extension of the idea was that once you demonstrate viability in the sandbox, you are able to then scale it up and file for regular product and then distribute it to the retail market. Which unfortunately has not happened for various reasons. I mean, part of it due to the pandemic coming in the middle and a whole lot of other things. But right now, that's where the sandbox is. It's kind of because there are a lot of backlog now. Not many companies are even wanting to test further new products in the sandbox. But if even we are able to pick it up from where we left it off early 2020 and then scale up some of those products, fantastic. Space we have, because then it gives you and if once the insurance companies can see the traction that regulator builds up, that you can test it for 6 months, and then the moment you are able to demonstrate say X volume of business, you are immediately able to kind of file and proceed to use the product. And if that traction can be built up, that's a great model to kind of test out new stuff and quickly scale up if required.
Thank you. That's fantastic perspective. There's a question, but before that, question from the audience. But maybe Avinash, I should bring you in here. I think the broader point becomes that deploying AI when core systems may or may not be ready, and I'm sure you've seen many examples of that. Any specifics from your experience where you see some of this, and any thoughts on how we should think about that?
So Rajal, you are right about it. If we look at the broad framework of the banking ecosystem, right? I mean, there will always be some legacy systems, or there would typically be, the platforms, as we choose to sort of call it, the core banking systems, the lending system, etc., which is actually meant more for online transactions, real-time transactions kind of an area. And effectively, the element of AI, we try to sort of, how we try to coexist with it is by essentially taking the data part outside of it. Almost all the players, what they have essentially done is they have actually tried to build an integration kind of a model in between, which is what sort of gives us the edge in terms of coexisting between the so-called legacy applications, and also try to leverage AI when it essentially comes to different ecosystems. And there are some great examples on that. I mean, if you look at the entire thing around, say, the lending value chain, right? You could take sales, you could take underwriting, onboarding. Okay, hundreds of examples over there. In case of sales, I mean, it helps in terms of Salesforce enablements, or even in terms of personalization. In case of credit underwriting, I mean, there are hundreds of models which are essentially available. In case of onboarding, I mean, we have gone all the way from verification to statement analysis to OCR capabilities to facial matches. And then, of course, you also have a few end-to-end stacks as well, right? Another great example, if I may to take, is in the area of, say, transaction monitoring. I mean, most of the banks nowadays, have invested very, very heavily in terms of transaction monitoring. It could be around cards, it could be around any kind of digital payments out there. And the way it is essentially done is that, okay, fine, I mean, there is a bit of a hook which sort of integrates with the core systems, sort of reads the data. There is a millisecond kind of a response, basis which if a response necessarily needs to come. We have sort of over the last 2 years, sort of perfected in terms of, these kind of integrations. Earlier, it used to be a bit of a challenge, but I think over a period of time, I mean, we have sort of, learned through a lot of errors also. Let me confess to that. And I think this is the way it is going to continue for some more time.
That makes perfect sense. Abhishek, if I could turn to you, your views on where some of the biggest gaps are today and where you'd like to see, the different players playing a different role.
I guess the primary gap now exists because of whatever the vintage or the way we have been operating is all around data. And that now problem actually limits the potential of use cases. I will go back to my earlier reply that theoretically it can be applied all across the value chain. The problem is that do we have appropriate data structure for AI to learn and then respond? And that's the key thing that we are trying to solve over a period of time. New age technologies have helped, as Avinash was mentioning, that you will have to, in your mind at least, go away from the core applications, move data out, then do something and then bring back in. That's the way we are also approaching. And let's see how world progresses from here.
Thank you. Nimesh, there's an audience question, and I'd like you to take a crack at that. And let me read the question out. It says, how important is it for businesses to take a collaborative approach towards developing innovative products? And on a similar note, do you think partnering with institutions from developed economies will help fast track AI implementation and training of resources? Or do you think starting from scratch is the best way to go? Nimesh, I think you might be on mute.
Very interesting question, Anil. So I would like to answer this in three parts. So first aspect is my observation has been that the industry leaders in India are far more nimble, quick in decision making, willing to take risks, and more ready to start with smaller companies to experiment. So I think we are ahead of developed markets on that aspect compared to others. So I think it will be the reverse in a few years where they'll try to learn from our industry leaders in terms of how they've taken risks and worked with innovative players. So I don't think that's an issue. Second aspect is in terms of partnering with institutions, but the learnings from data in the US is and which is where most of the research happens, is very different than India. And in India, IIMs as well as ISB, you have institutions which have high quality research faculty. I think collaboration there is definitely a must. And the third aspect is businesses collaborating with us. But Abhishek mentioned, the biggest challenge is getting the data streamlined. That's the thankless job, the most difficult part. And business users have to understand that the technology teams have to go through a lot of nightmare to, streamline the processes before anything good can happen, as well as tech has to engage business a lot more to keep them in front when they're trying to design solutions. I think that aspect of streamlining data will happen in the next few years. Once that happens, then you'll see a lot of innovative mid-office solutions coming up. Right now, most of the solutions are point-facing, where we are trying to interact with customers directly. But I think this is where the businesses will, and most enterprises are becoming more mature to invest in these long-term projects also. So I am very optimistic of things working out in the Indian ecosystem.
Perfect, thank you. Maybe Girish, I should bring you in here as well. As we know the challenges with data, but as we get more data, as the algorithms mature, obviously some of the existing risks, such as obviously the performance risk about error and bias and variance and so on, opaqueness of the models, security risk, enterprise risk of reputation and legal risk, etc. How do you see those becoming more relevant, less relevant? What's a good way of thinking about those?
Well, see, let me just split that into a couple of parts now. And I'll just go a bit back into our journey on the security risks as such. So when we started off on this AI journey about 3-4 years back, when we have our own data science team which develops AI models, and we have in some cases where we believe that stuff is core to our business, we develop the AI models ourselves. We don't look at partners, but where there's pretty much there are some stuff as commodity, right? Like ICR, OCR related stuff is commodity. I mean, to read a Aadhaar card or read up this, it's I won't spend my time trying to develop my models around that. And that's not required. So we had a core team which was looking at AI models and claim handling and stuff. And again, like Kavinash mentioned, there are platforms on the cloud which allow you to do all this very cheaply and very fast. So we're using that. But our entire production data center was on-prem. So we had to have a different security model on the cloud and connected to the on-prem, and there were a whole lot of issues out there. Over a period of time, we have moved our entire production data center also onto cloud. And we kind of almost right now 95% onto cloud. Our core is working off the cloud right now. So it's a kind of the entire security posture then gets quite differently managed. Though it is multi-cloud architecture, but still the level of enhanced security that you have and the kind of ring fencing that you do, you can do in a much better way when everything is on a similar platform. The biases in data is something that we need to be watchful for. Frankly, right now, especially in the context of GI space, general insurance space, since most of our data is related to assets, right? Except for health insurance, I'll just leave that aside. Most of data, whether we are trying to do image handling for auto accidents or in home insurance, trying to do claim processing using images or so on and so forth, most of that is asset based. So to that extent, the bias question does not arise much. But definitely when looking at the health insurance space and looking at claims handling out there, we need to be cognizant of the biases that can creep into the data and then compensate for that in our models.
That's fantastic, Girish. Avinash, from your experience, can you share a couple of stories where things haven't gone well, but you think if the broader ecosystem play were to be brought in, you think that would be different going forward?
So, see, right now, let's take a step back on this one, right? I mean, fundamentally, what I think is one mistake which not only customers make, but even some of the technology providers, they are looking in terms of AI being applied as a technology and not from a customer or an employee intent of enabling, enabling this from a perspective of actually solving problems. Okay. We need a little more reimagination in terms of services. We need a little more imagination in terms of the journey plans for this to be nicely embedded. I don't think this is so much a technology problem as much as it is in terms of learning to live with AI. Okay. I mean, the problem over here is that okay. I mean, everybody ends up looking at it as a problem to be solved, and there are models out there which can actually solve the problem. But for example, if I look at the point which Abhishek raised, or if I look at the point which Girish sort of mentioned, I mean, the data models in the bank, the data quality in the bank today does not actually sort of answer to those kind of efficacy demands which is out there, right? So there is a bit of a gap over there. The other problem statement is that there is opportunities galore, a lot of point solutions, but at the end of the day, what it is also doing is that there's a bit of fragmentation out there which is happening. And at the moment, I would even go to the extent of saying that there is slightly lower maturity in terms of the underlying, big and fast data and analytics platforms, which is being put to use. This is something which can only improve and better over time. So would I continue to stay invested in AI? Obviously, I think all of us are. It's a big bet. We are already seeing, fairly good returns in terms of, wherever the investment has actually worked. But more than technology, I think the idea is to sort of, pay adequate amount of attention to the change that it is going to require in the operating models and the new roles which it's going to sort of force upon us to create. I think unless and until structurally those are addressed, I mean, this particular problem is going to be there faced by this organization for a little longer.
That's great. Thanks, Avinash. Abhishek, there's a question around the industry perspective on cybersecurity, but as you think about this, I'd say maybe think about other issues and use cases as well. The question is, let me read this out. From an industry perspective, practically, how serious is a cybersecurity ransomware threat, given the sensitive nature of information that's handled, particularly in insurance and banking? Would you recommend light touch regulation or a strict approach to such matters? And maybe you could talk about not just cybersecurity, but other areas of risk where you think, the nature of the regulation plays a part.
Thank you so much, Rajni. It's a pretty difficult question to answer, first of all. Okay. I guess we can't take cybersecurity casually anymore. Especially as far as L&T Financial Services is concerned, no way. Because most of our assets are already on cloud. So if anything happens, then we are finished. So that's where we are. And what we have done is that over last 1.5, 2 years or so, considering this particular new risk emanating, we have invested heavily on our overall security perimeter and defenses around it. As far as use cases are concerned, most of us read newspapers. 2 financial services, big players, software providers have been hacked. So I don't think this problem is now only limited to outside financial services. It's creeping towards us, and we have to be very serious about it, and we are trying to be serious about it. Around your challenges thing, perhaps I will talk about a particular use case, and perhaps that will throw how exactly we are thinking about it. Is we are into tractor financing. We are market leaders. I don't know whether many of you would be aware of that or not. Now, because of that particular position, we have data as far as farm sector is concerned. For last 3 years, we have been trying to build a use case where we can predict farmers' income, because as we all know, rural India, farmers' income, a bit debatable thing. All sorts of technologies available, like Google Earth can actually measure, can give you the plot size, can tell you what is the moisture content. But tying this all together and bringing up with the actual income estimation model has been thoroughly challenging and frustrating for the last 3 years. And I guess where all the ecosystem has to work towards is that if we are able to solve this, then we will be able to solve a big problem of rural credit offtake. And that's the core thing, that we'll have to figure out use cases which is actually impactful, and then all work together, academia, regulators, everyone works together to figure that out. Automatically things will start improving from there.
Great point. And maybe, Nimesh, you have worked in this area quite a bit. Avinash mentioned that AI is here to stay. Abhishek, I mean, everyone, that's known. Supply of talent, right? That's and we read the press about the Great Resignation, etc. So, I mean, how should maybe the education sector, maybe the broader universities and so on, any guidance for them?
So Rajnil, like I've led a research team and did policy in the skill development and employee education space. worked even with the World Bank, for an NSDC. My experience largely has been that, right now the premium is being paid to the assemblers in between, right? People who will pick up algorithms which are available, build solutions, and then deliver. But the most difficult part actually is designing algorithms, data structures, or setting up the pipeline so that things can work at scale, which is the data engineering piece. And that's where most talent is cheaply available, not invested in terms of training. And the minute people move, that the assembly is not the difficult part where we are paying premium. The difficult part is building the algorithms and setting up the data pipeline to scale. And salaries start expanding there, I think the problem will get resolved. I think
Sorry, not to interrupt, but as there's also been this trend towards low code, no code. So
that in fact, so even platforms like Rockmetric, right? All of us, what we are trying to do is to try to reduce the dependence on the assemblers in between, right? And so the trend will be that the salaries which are disproportionate right now because of people who know how to use tools currently. So if somebody who knows Python gets a premium, they don't get a premium because they understand how to predict rural income today. The people who can predict rural incomes are statisticians with economics background. None of them are getting paid the premium, but they'll be the ones who will get you the most value for your business right now. So there is a there is a mismatch today in the market. People who actually add value to you are not getting the premium, but people who are actually the goal finishers, who will actually kick the ball to the goalpost, are getting most of the premium. So people like all the new tool providers are trying to create low code tools to make sure that the people who are driving value, like the business users or the IT ops teams who deliver the difficult job of cleaning and ensuring good quality data, start generating a lot more value for themselves. Once that focus shifts, I think this problem will get resolved. And from a skills perspective, every time the industry complains, but when the e-commerce boom happened, you didn't have e-commerce training centers before the boom happened, right? It's after the boom settles down and you're not able to pay the high salaries is when the skill shortage discussion starts. Similarly with education, we kept complaining about teachers, but last 3 years, so many edtechs have come up and they've done so well. Nobody complained that we didn't have resources and hence we didn't grow. They grew because they started paying salaries. Now, once the growth will taper down, they'll complain about salaries and the conversation on talent crunch will start again. So my observation as a researcher in policy was that the issue on talent crunch comes when the growth stabilizes and you're no longer able to pay those premium salaries which you were paying during the growth phase. I don't see that happening issue in AI in India. The issue will happen is that you don't have enough people who can build algorithms or create good quality core tech within India. And that's where they need to collaborate with very good quality PhD researchers, which is not happening. I think that's the big gap where the industry is not leveraging the high quality research talent available within India. It's limited, even that's not utilized to the fullest pace.
Fantastic. I wish we had more time, but in closing, maybe I should go around the table and ask for where each of you see, maybe the top 1 or 2 or 3 things that the Indian financial services sector should think about going forward. Maybe we can begin with you, Girish.
Definitely, like Avinash said, AI is here to stay. So what we need to figure out is which parts of our business we can implement it most and with the most bang for the buck. I mean, right now, like we discussed, most of it is only going to the front end, but there's a huge potential of using AI internally, which today, in the rush to get into newer and newer things for the market, that is one space which doesn't get the attention it deserves. And probably we can look at how we kind of invest in that space to give us far more bang for the buck out there.
Excellent. Avinash, your thoughts?
I second that. I think the focus so far has been on point solutions. The second thing is what definitely consumes a lot of time is, the entire training that we need to do around some fundamental models, right? For example, I come from the banking industry. I mean, the trade papers are not going to be very different between bank A or bank B or bank C, globally for that matter. But I mean, you speak to any service provider, big, small, cloud service providers. I mean, everybody will basically talk about the fact that, okay, we need to train your documents and we need to sort of, build some models out of the same. And frankly, my response to them is that I'm not a training institution. I mean, some of these things really needs to be coming out of, it needs to be out of the box for me. Okay. There are areas where obviously as a bank, I believe that, okay, I have the upper hand and I want to sort of build a factor of distinction. It is in those areas where I, as a bank, will actually sort of, start focusing in terms of, building those models. Okay. Where I can be expected to spend some time, devote some energies. I think this is an area in which these service providers will have to focus on. I mean, today it takes too long. I frankly don't think most of my peer group, including the folks who are there on this particular call, want to actually spend that kind of a time anymore. You brought in an interesting aspect about biases. The data set that we are dealing with in the country right now is too small, but it's a very important item. Going forward, how will we remove these biases is going to be an area, a completely different stream, I think. There's going to be a different team which is going to be staying focused on that as well as security and those aspects. So yeah, interesting times.
Fantastic, fascinating. Abhishek, your comments.
Yeah, I think Avinash has summed it all. We have to be focused on use cases. And there is a difference between use case and an idea. All of us have lots and lots of idea, but only when we are tying up all these things which is required to fulfillment of that idea is then use cases arrive. And I will go back. That means at this point of time, all of us, and I'm sure others will also agree, are struggling beyond image and geospatial as far as AI is concerned. And we have to quickly come out of it because the potential is immense. Let's work towards it.
Fantastic. Nimesh.
Yeah. No, so we are a growth market, right? So in a growth market, people will focus on immediate solutions and not think about long-term research problems, right? So from that perspective, there are two major things. One is that the transition of AI tools started from tech teams to analytics teams, and it will move to business teams. The minute it moves to business team, that means mid office use cases, which also means that they look for solutions because business users will not have the time or the patience like the tech or analytics team have to work on long-term projects. So for service providers like us, the feedback is you come prepared and deliver value and take the money. Don't make us spend a lot of time because we have to run the operations on a day-to-day basis. So I think that transition when we move to the business user now to sell will be that you come with solutions, don't come with tools. I think that is one learning that we've had.
No, fantastic. I think we're out of time, but thank you so much. I know you are all very, very busy. Thank you so much for taking time for this. I think this is, India is at that point of inflection, right? So I think we are at that point when you have seen enough use cases, both positive and negative, and I think there is enough for us to kind of learn individually and collectively to make this a success story rather than and also. And I think from what I'm hearing in this panel and in my conversations broadly is that it is everybody wants this to succeed. And I think what we also heard is some of the basic opportunities as well as the threats and the challenges are the same. So this is a good opportunity for, I think, the broader ecosystem to come together and figure out how we can grow this to scale for the country to realize its potential, and the different players realize their potential. Thank you so much. It was a pleasure having you on the panel.
Thank you.
Thank you, everyone.
Thanks for your time. Bye now.
Thank you. Thank you.
To derive meaningful insights and make life better. The world, connected by the internet. People to people, places to businesses. Millions of devices and gadgets speaking to each other, generating data. Data that provides the opportunity to derive meaningful insights and make life better. Think about the necessity to automate it, analyze it, streamline it, secure it. Think about the complexity of this. And if you think this is big, I'd say we're just about entering a whole new era. This is the time to figure in depth what data is saying, to let it guide us, and for us to guide it. This is a time where we need a platform that can talk data like never before.
Orpheus is, as I said, a category creator.
A platform that can work with both structured and unstructured data across multiple kinds of entities, decoding encrypted traffic across geographies.
We are always on the forefront of technology and innovation, driving the digital journey for businesses.
This is what makes Perfios the leading product technology company in the fintech space, enabling financial institutions in real-time analysis, underwriting, and credit decisioning. Perfios aggregates, streamlines, and analyzes data and presents it back without the complexity as domain-intensive solutions at one's fingertips. It's a platform with zero incidence of any security and privacy issues.
Perfios has a trusted customer base of more than 1 million people. Because Perfios always places customer first in everything it does.
By building great value for customers, Perfios has become their trusted and committed partner, passionately innovating and delivering state-of-the-art technology to its clients, transforming their end customer experience. What is needed is a platform that is agile and scalable, adapting as it learns, developing insight and context, predicting the right solutions for decision-making.
That's the platform for the coming age.
Perfios is a market leader in India. We are now taking this success internationally. We're rapidly growing in the Asia Pacific and the Middle East regions.
Growing more powerful, emerging more intelligent, becoming more intuitive. This is Perfios. Let the future begin.